Alright friends, welcome back to the Let's Trade. It's only been a few days, but boy have they been crazy. Monday we had a nice day, shot up. Tuesday was also a booming day, and then all of a sudden, Wednesday, stocks took a turn for the worst. Hit our portfolio pretty hard. I made some adjustments that I'll talk about later, but we're going to be back. I'm not worried about it. It's just the broader market trend affecting our long positions. Nothing to worry about. Okay, so let's get into the meat and potatoes of what happened. So Tuesday, we had the opportunity to close a lot of these positions for a decent gain, but I didn't, so that's on me. In particular, this one, I had a feeling that some volatility was going to return, because like we talked about in the previous episode, we were looking for that breakthrough, which never happened. It bounced pretty hard off of that $14 level. And that should have been a clear indicator to me that they were not going to surpass that level, and we're going to plummet right back down to earth. So I could have closed this for a $20 gain, but instead I waited until Wednesday market open, after stocks had already taken a little bit of a beating, closed it for only a $7 loss. So not terrible given how it ended the day. Could have been much worse. This one I realized probably wasn't the best tool to capture that move. Even after Monday and Tuesday's big upward movement, the price of this really stayed right around $30, and then only started to move when stocks went down. So that probably wasn't the best tool for us. We'll keep that in mind moving forward. And lastly, on this one, like we mentioned, I needed a SPY to stay above $303 in order to make money on this, and it took a steep nosedive on Wednesday, which was the day that it expired. Although it did end up above $304, our max risk on this was way higher than the max gain we could have gotten. So I decided right on market open, I'm just going to close it and secure a $9 gain. Next, I made a play on Microsoft yesterday that I thought was a good play, but was probably a little bit premature. I got hot hands, really wanted to make money. Sometimes I like red days as a trader because it means there's opportunity. A lot of selling means lower prices, more opportunity for us to get stocks we like at low prices. Microsoft is one example of that. However, I don't think it was the right play. It was too early. I thought I saw signs of reversal, but it was just me getting fooled. And they really hadn't moved down as much as the overall market had. And typically what you're looking for is you want to see stocks that get beat down worse than the market did, because that means they have more room to recover. I think for Microsoft this was a necessary correction given how much they'd ran the past few days. So it probably wasn't the best move. I was able to exit today for only a $20 loss. Stings a little, but it could have been much worse. So I'm not too worried about it. So we're taking a swing position on AMD. I've been beat down the past 2 days amidst some positive news, which to me seems like a good setup for some upward potential. And they also have a pattern of getting oversold and then coming back, which we'll talk about a little later. The security we chose allows us to capitalize on a principle called leverage. And leverage is where we control 100 shares of the stock and thus capitalize on the gains of those shares without actually having to own the shares. It's a little bit riskier than just owning the stock outright, but it's less risky than buying an out-of-the-money call. It's a nice middle ground. So this next play is what's called a cash covered put on Workhorse. We're essentially agreeing to buy 100 shares of Workhorse at a given price, and we receive a $140 premium for doing so. Whether or not we actually end up buying those shares is contingent on the stock price at the expiration agreed upon in this put. Don't worry too much about what all this means. Just know that this is part of a bigger cycle that we hope to capitalize on in the long run. So ideally, Workhorse closes above $7.50 upon expiration of this put. We get to keep our $140 sweat-free. Lastly, I purchased this put on INO. This is kind of a gamble, but I'm trying to take advantage of some serious overhype on a biotech stock. Essentially, INO ran up these past 2 or 3 days on some news about Corona. So I think they acquired some deal with the government or something, some news that ran the stock price up from about $14 all the way to I think 28 at the peak. And so I have a sneaking suspicion that it's going to come back down to earth to some extent. And so if it does, this will turn into hopefully a lot more money. Again, it's a little bit more risky, but I'm alright with that. Sometimes you got to risk money to make money. This seems like a pretty good opportunity. Okay, we're over here in Thinkorswim. We're going to take a look at AMD's charts. We're on the 180-day, 4-hour chart. So each of these little bars represents 4 hours of trading. What I want to look at is down here. This is called an RSI study. And what this means is when it's down here at the bottom, a lot of people are selling relative to the fair value of the stock. And over here means it's overbought. So if you look at AMD, it has a pattern of being oversold, then overbought, oversold, overbought, oversold, overbought, and etc. And so if you look today, it just touched the oversold part of the graph and is already starting to reverse a little bit. If we move into a shorter time frame, you'll see we bought in around here and it's starting to make a recovery already. So hopefully in the next few days we see AMD come back up to this $54 range where it was trading at before and make a lot of money. So we're here at the watch list, and tomorrow we're going to be patient. We're going to watch for stocks that got beat down more than the overall market, as we've been talking about, and we're going to look for some laggers. They're lagging behind the rest of the recovery. That is, if the recovery continues. A good example of that is Facebook. We've taken quite the dump these past 2 days. I'm not sure why. I'll look into that later, but there could be an opportunity to buy there. They're pretty cheap right now. So let's talk about Nike for a second. Nike's down big after hours after a pretty terrible earnings report. But this has me suspicious. Typically, stocks take the expectations that they're given, the earnings per share expectations, and it's factored into the price in anticipation of this earnings report. And then the actual earnings per share comes out and the stock price reacts accordingly. The thing about this is it makes sense if these expectations are accurate, but if the expectations aren't accurate, then your stock price is moving based on things that have nothing to do with the actual performance of the company. The reason that these estimated earnings have such an influence over the stock's price is because in almost all the cases, they're pretty accurate. So when a company misses expectations or beats expectations, it really does come as a surprise. A big reason that Nike's earnings per share was so low is due to store closures, which makes sense. Less stores open means less sales, and thus lower earnings per share. What doesn't make sense is why that would be such a red flag for Nike all of a sudden. If you look at their stock, they've pretty much been following the overall market. And the overall market these past few weeks has 100% been driven on Corona and reopening news. So I don't see why all of a sudden, just because they missed expectations, this would be a huge reason for concern for Nike. So in my mind, it seems more likely that these expectations for Nike were just too lofty. And then this abrupt sell-off is a huge overreaction, and we'll see it quickly return to the levels it was at. So I'll be on the lookout for Nike stock making a comeback, most likely next week, but sometime soon. And lastly, we have UVXY. If the market goes absolutely bonkers tomorrow, this would be a nice security to make a play on. But that's it for the watch list. So we're here in Robinhood, and take a look at what I'm talking about. This is where Nike closed today, $101, and this is where Nike is now. This just seems like such an overreaction to me. Nike's going to be fine. They're not in any financial danger. They're still the leader in their market. So I'm not too worried about it. I think they're going to go right back up, and we'll look to make a play. Oh boy. Alright, we'll end it off here in Robinhood. As you can see, these past 2 days did quite a number on my portfolio. But we took necessary actions to position ourselves better for the future. and I like the way that we're trending. So let's hope that the market is nice to us over the weekend, and I'll see you in the next one.